I want to do a quick compare and contrast between SoFi and I want to compare SoFi personal loans to Universal Credit and also Happy Money. So here's the approach I want you to think about. I want to first start with SoFi, so we have a clear idea about SoFi personal loans. So when you think about SoFi personal loans, I want you to think about flexibility. I want you to think about speed, so that's really good. And I want you to think also about the optimization of your credit product. So that's really fantastic. Okay, and so SoFi is actually an online lending platform that offers unsecured personal loans in every state. And so you have loans between $5,000 and $100,000 are available for terms ranging for 2 to 7 years. So that's an important criterion to remember. So SoFi, they will approve you for personal loans all the way to $100,000. And so minimum credit score, you are looking at 600 to 650. So, but SoFi actually allows you to pre-qualify for a loan. So you can have a soft pull process. So they'll check your personal data and see how much you could qualify for. And so you have a pre-qualification with soft credit check. You have funding in as little as 2 business days. So that's really fantastic. And also you have high loan amounts and lengthy terms. Okay. Now the only thing we don't like with SoFi is that SoFi does not allow you to have co-signers. So if for any reason you cannot qualify for a SoFi loan, you are on your own. You are toast. I mean, you can actually go and take let's say an uncle or an aunt to kind of help you out. Okay. And so some applicants actually have reported difficult qualifications standards also. So this is something to really think about. But overall, what we love about SoFi is that you have a top personal loan option for prospective borrowers who have fair to good or excellent credit. Okay, and so loan amounts $5,000 to $100,000, and but actually minimum loan amounts are higher in certain states. So for Arizona, for instance, the minimum loan amount actually is $10,000. Massachusetts, same thing. New Hampshire, the same thing. And in Kentucky, for that matter, the loan minimum amount is $15,000. So you have a lot of flexibility across the lending platform. In terms of if you want to reduce your APR, you want to actually enroll in autopay, so you can actually have 0.25% shift off. So in terms of qualifying for a SoFi personal loan this year, what we love about the application process is, I think I've said this before, you have a pre-qual process, okay? So you can see if how much you could qualify for. And in terms of credit score, minimum, SoFi wants you to have anywhere from 600 to 650 to actually qualify. But what's really good with SoFi is that they have their own factors when it comes to underwriting underwriting loans. So this could go anywhere from your personal employment, so your employment history, all the way to your financial situation. And so SoFi actually doesn't look at one criterion and say, you know what, you are qualified. No, they look at your overall financial situation. As a matter of fact, they also pay attention to your DTI, so your debt to income ratio. So they will want you to actually have a DTI that's below 30%. If you have a DTI above that, this could be a little problematic, okay? But to apply for a SoFi personal loan, the process is pretty simple. You can actually apply via the app, the SoFi app, or you can apply online, or via even they actually have other ways. You can actually call SoFi and they will work with you to approve you real fast. So you want to pre-qualify first. Please pre-qualify. It doesn't matter if you think you have a great credit, you have a great credit score. You always have the opportunity to test out the waters first. So pre-qualify, and then you want to complete a loan app, let's say an online application. So in terms of pre-qualifying, if you go through the process, SoFi will offer you a couple of loans, and you have to choose the one that works for you in terms of loan amount, in terms of repayment history, in terms of APR as well. So that's really good. And so once you complete an online application, you want to wait for approval. And and this usually happens within 2 to 4 days. And then once everything is fine, you get approved. You have to sign the loan agreement. You have to receive funds, and funds actually are sent to your bank account, so your personal bank account. So make sure that you actually give, as part of the application process, actually your personal account data. And so once you get everything done, You just start making payments, and and that's it. So that's really good. I want to talk to you now about universal credit. Remember, we are still doing a compare and contrast between universal credit, Happy Money, and also SoFi. By the way, Happy Money used to be called, back in the days, they have rebranded. I mean, that there was a different, it was a different name, okay? So universal credit, I want to talk to you about universal credit. So when you think about universal credit, I want you to think about a fintech company that's actually owned and powered by Upgrade. So there is a total correlation between Upgrade and universal credit. And with universal credit, actually, you have loans available from $1,000 all the way to $50,000. Okay, and so basically, those loans are originated by partners Cross River Bank and Blue Ridge Bank. Remember, Universal UCC itself, Universal Credit, they do not actually they're not a direct lender. But what we love about Universal Credit is that maximum interest rates are kind of like moderate depending upon your financial situation, and also UCC actually is pretty flexible in terms of credit score, but also DTI. So they will accept you even if you have a low credit score and a high DTI. We have seen situations where actually universal credit actually allows you. I mean, not UCC. I don't know why I'm calling universal credit UCC. It's UC. So universal credit will actually has approved borrowers that had actually in the past. I don't know right now if they're still doing it, but in the past, like 2 or 3 years ago, they approved folks who had actually a DTI all the way to 45%. And if you know what DTI really is, you know that DTI 45%, that's really high. But basically, UC Universal Credit was okay with that, and also credit score as low as 500. So when you think about universal credit, I want you to think about a low borrowing minimum. Funds are available as soon as 1 business day, and minimum credit score that goes all the way to 500, all the way to 580. But in terms of the minuses that come with universal credit, rates are high compared to some lenders, and this universal credit, they charge you an origination fee that goes from 1% all the way to 10%, and the loan actually maxes out at at $50,000. So to apply for actually universal credit personal loan, you want to see what rate you will qualify for. So the process is kind of similar to a SoFi in the sense that you have the ability to pre-qualify. You can actually see like a soft pull process. Remember that soft pull has no impact on your credit score. Okay, and so once you actually go through the pre-qual process, you want to choose a loan offer that Universal Credit has for you. Okay, and so basically what they will do is that they will actually will give you a series of offers based on the loan amount, the APR, but also the lender. Remember that Universal Credit works with partner banks, okay, and so that's kind of important to really think about. And you just have to wait for approval. I mean, approval might take up to 72 hours with Universal Credit. I mean, we have seen cases where they approved folks within the same day, but that's kind of rare though. So that's kind of rare. But Universal Credit is highly rated on Trustpilot, on Triple B, on those review websites. So that's kind of cool. And so once you receive funds from Universal Credit, you can use the cash the way you want it. Then not a problem. Okay. Universal Credit is pretty flexible in terms of the use of loan proceeds. They'll work with you. You can actually like one thing for sure. If you have a change in situation, you want to contact Universal Credit real fast. Okay. And this is an important element to think about. And also what we love about the Universal Credit also is that they can approve a loan to be repaid within 24 to 84 months. So we are speaking about 2 years all the way to 7 years. So that's kind of cool. And so you are able to see what works for you. And one thing I want to say also is that basically Universal Credit is really sort of more generous than other players, such as Avant, for instance. Avant is a great lender, by the way, but Avant actually gives you a maximum loan amount of $35,000. But Universal Credit goes all the way to $50,000. Okay, so that's really good in terms of possibilities. We love that a lot. But remember that Universal Credit and Upgrade, like if you were to compare it to Upgrade or even Upstart, all those are fintechs. They are not traditional banks. I want to talk to you now about the third lender into this conversation. We are speaking here about what? Happy Money. I mean, Happy Money used to be called back in the days Payoff, just in case you actually dealt with Payoff back in the days. So Payoff actually, Happy Money offers competitive credit card consolidation loans ranging from $3,000 all the way to $40,000. So you can see that right off the bat, SoFi offers you up to $100,000. Universal Credit gives you $50,000, and the Happy Money is giving you 40 grand. So you can see the delta in terms of loan amount right away there. Okay, and also Happy Money wants you to really use their loans for credit card consolidation, not for anything else. I mean, they are flexible when it comes to using the loan proceeds for other stuff, but you stand a lot more a higher probability of approval if you were to go to them for a credit card consolidation loan. Okay, and so this is kind of cool. So when you think about Payoff, I want you to think about a lender that clearly states minimum borrower qualifications. APRs starts lower than some competitors, including Universal Credit and also SoFi, and there are no application fees, late payment fees, or prepayment penalties. So you have a lot of flexibilities there. So a lot of flexibility. We love that a lot. And but on the flip side, you have a low maximum loan amount, and this loan can only be used for credit card consolidation, and you may be charged an origination fee up to 5%. So that's kind of high, but it's kind of customary in the industry to actually have that 5% or even 7% for that matter, 7% origination fee. Okay, but just remember that if you are in Massachusetts or Nevada, you are not going to qualify for a Happy Money personal loan. Okay, so this is something to really think about if you were to apply with them. So how do you qualify for a Happy Money personal loan? Well, personal loan applications are approved or declined based on a number of factors, and so you have to really, in terms of FICO score, they'll look at a minimum of 600, and also a CUR credit utilization ratio of 33%. So how do you apply for a Happy Money personal loan? By the way, again, I want to insist on the fact that with Happy Money, you can only get a personal loan for credit card consolidation. Okay, and so, but the process is pretty similar to what you had with Universal Credit and also SoFi. In other words, you go through a soft pull process. So you want to see what rate you are likely to qualify for, and you want to choose loan terms. Okay, and after that, you want to actually provide additional information for verification. They'll ask you all kinds of questions. I mean, the paperwork is kind of lengthy when it comes to Happy Money. That's what we have seen in our research, and basically they might ask you to provide a copy of your driver's license, passport, or other state issued ID, and they may also ask you to verify your income with your two most recent pay stubs and your most recent full bank statements. Okay, and so this is what we have seen. I mean, Happy Money actually, they tend to actually approve fast as well. They might give you the cash fast, but they are going to ask you for more paperwork. More paperwork. Okay, let me drink some water here. Thank you. So what you're thinking about here is that when you close your eyes and think about Happy Money, I want you to think about your ability to actually lower your APR with autopay. So that's kind of cool, because Happy Money, they're charging you somewhere from 11% all the way to 18%. So that's kind of interesting, because you are able to work with a lender who's very flexible. Okay, so but remember that you are limited to $40,000. You're not having the likes of Livestream or SoFi, who are very generous and they can give you all the way to $100,000. No, you are going to be limited at $40,000. That's number one. Number two, you can only use the cash for credit card consolidation. So there are cases where basically Happy Money will actually pay the credit card issuers directly. In other words, they're not giving you the cash. I mean, they used to do that before, but during COVID, for instance, we've seen that they started releasing checks to the borrowers themselves, and actually hoping that the borrowers will pay the credit card providers. But their routine, their model is a little different. They'll give you the cash, and they will actually they will actually pay the your lender directly. Okay, the credit card provider directly. So SoFi versus Universal Credit versus Happy Money. So which one should you go for? Before I answer that question, let me give you the overview when it comes to choosing a personal loan and being approved for that personal loan in the first place this year. It's important to always start the conversation by knowing your credit score. Where are you at? Are you a 500? Are you a 600? Are you a 700? You want to really start the conversation there because what you can qualify for will be determined by the credit score you have, among others. Okay, and you also want to make sure that you run the numbers. If you're comfortable, if you are confident that you will be approved, no problem. But if you're not comfortable, you want to really use a loan calculator on a financial website to see how much you can qualify for. Because when we talk about running the numbers, we're not just talking about your payment fees. We are speaking about your the payout. In other words, if you have a loan that has origination fees, how much you will get actually net, because you have the gross loan amount and you have the net loan amount. But hey, listen, if it's 5% or 10%, that's actually money out of your loan right off the bat. But you have to pay 100% of the loan, right? So you want to think about those as well. You want to think about origination fees. You want to think about like if you have early payment penalties, for instance. Okay, so you want to review the lender requirements and gather documentation. So when we talk about actually lender requirements, some lenders have different requirements in terms of credit score and report, DTI ratio, debt to income ratio, income, collateral. Okay, and also you have to really consider your options. Maybe you want the cash real fast. Maybe you can wait for more months. Okay, so you always have to think about that, and you have to choose a loan type, right? Loans, personal loans. When we talk about personal loans, you have all kinds of loans, right? You can have that consolidation loans, like the one that Happy Money is offering. You can also think about credit card refinancing loan, home improvement loan, medical loan, emergency loans. Those are really important. So you have to know which type of loan that you're looking for, and you want to pick a lender, the right lender, and apply. And you want to apply real fast. And sometimes it could be interesting to actually have a conversation with a lender on the phone and have you can have a conversation with a loan rep and ask more questions before making a decision. So here is the selection: SoFi versus Universal Credit versus Happy Money. Which one should you go for? Well, our answer is pretty simple and pretty straightforward. We go with SoFi. SoFi is way better because SoFi actually will approve you for a maximum loan amount of $100,000. Happy Money is more for credit card consolidation, and Universal Credit is really it's really in between. So the best of the best in among those three in today's conversation is SoFi. So here's the bottom line. In today's conversation, I spoke to you about SoFi versus Universal Credit versus Happy Money, and I give you the approach. I give you also the overview, the selection, and now the bottom line. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.